All right, guys. What is going on? What is Gucci? What is Gucci, gang? Howdy. Did you guys have a good weekend? Did you guys have a good weekend? Let me know what you did. I'm curious. I am curious. I'm also curious if we can get 7,500 today. That would be good. Yeah, that would be good. We'll see. Oh, somebody noticed the new cap, huh? Wow. There's at least one of you that pays attention. Now I got to get all 170 of you more to start paying attention. No, there's only two backgrounds. There's the Stoic one and there's this one. You know, honestly, I don't have I don't know if you guys understand OBS, but I don't have a scene for either one, so I always have to manually swap them over. Which I usually don't feel like doing because I am lazy, I guess. I just don't feel like doing that shit. Stuff. Boom. I don't feel like doing it, chat. I don't feel like doing it, you know? But no, I got this hat at a place called Cavender's, I believe. So, along with a cowboy hat too. I think I told you guys about that. I think. Anyway, what's good? Willow, Mark, Gavin, Slowly, Joey, Capitalist, Eberneth, Marshall, Adam, Julius. Ordered some field notes bundle. Let's go, dude. Let's go, chat. Listen, drop a one if you guys finally caved in and bought a pack of field notes, or if you have one already, man, let me know. Drop a one in the chat. So far, I think people are liking it. I got one person that posted on Instagram and tagged me. I got one of you. We're working on the other 170, but there's at least one of you that got it. Man, I'm excited now, dude. I don't even need the rest of this energy drink. Actually, I'm lying. I definitely do. But that got me hyped, man. I'm happy for it. I'm excited. What a good morning. Afternoon. What a good afternoon. RDH, what's good, man? I messed up a brisket. Ooh, rip. Life is blessed, says Willow. Literally living the dream. Trade from home. Trade from home, dad spending every second with my two boys riding dirt bikes and having fun. Well, if I didn't pin the field notes one, I would have pinned that one for sure. Love to see that. What's good, Felix? And anyone else that I might have missed. What is Gucci? What is Gucci? Long from 7416. Oh yeah. Okay, nice. No, we're fixing that blast to 7,500. I mean, I think so. I think it has a very high likelihood that we're gonna do that. Not field notes, but a pocket notebooks. Get out of my chat. Get out. I'm just kidding. What kind is it? Is it a Robokai? Is it a Fabriano? Is it a Lockbee? I don't have a Lockbee. But there are actually a lot of brands of pocket notebook. So, but let me know which brand and let me know if you like it. Felix, you ordered some? I left those in the Marines. Hey, fair enough. Willow's got PTSD. Pocket notebook PTSD. It's fine. No worries. No worries, my friend. What's good, Scott? Yeah, I mean, you're late, but you're not like Mason late. Mason will be here in like 45 minutes. Right at the close. So, at least you're not that bad. Ampad. That doesn't sound manly at all. I just bought an Ampad. A what? What did you just buy? You bought a pad? What? The fuck is going on? What is going on? Oh, dude, gross. You bought a spiral? You bought... Wait a second. Pause the music. You bought a spiral bound pocket notebook? There's no way. For real? It is a spiral? All right, that's going to be it for me. So y'all be good, be blessed, man. We'll be here same time, same place tomorrow on Tuesday the 30th. Y'all be good, man. See you tomorrow. See you tomorrow. No, I'm just kidding. I'm just kidding. But no, that's crazy. Like, that is absolutely bonkers that you got a spiral notebook. That's insane. It's just, look, bro. Look, bro, for me personally, the spiral part, it sticks out so much. You know, so it's gonna get caught on your pocket, or it's gonna get like caught on things, you know? And it defeats the purpose of a pocket notebook, you know? So now I won't end the stream on that, but golly, if there was ever a day, my goodness. Yo, got my mood up from getting pocket notebooks, and now you brought the mood back down. We're at break even now. We're getting the spiral one. Absolutely insane. Joey said Pride Month edition. Yikes. Big ol' yikes. See, just when I think you guys are doing great, you go and you do the things that you do, man. You know what I'm saying? Where do we even go from here? All right. On the Pride Month joke, let's transition into next book of the month. How about that? So, oops. Book of the month for next month, for July, is The Monk Who Sold His Ferrari. Can you guys see that? My least favorite thing about the Facecam 4K, I have to change the settings on it, but when it auto focuses, it auto dims as well. So it makes everything else less bright, you know, kind of like the women in my life do, you know, make everything less bright. But that is book of the month for July, man. The Monk Who Sold His Ferrari. The Monk Who Sold His Ferrari. So we're getting a little bit closer. We just made a new high of day. I know I've been chilling on the 15-minute time frame. But we just made a new high of day. Beautiful partials if you are on multiple contracts. We're not even at a macro either. So we'll probably see that continuation. Don't you just love it? I almost read the half of it and have to say it's a must read. Don't miss on this, fam. Yeah. I liked The monk who sold his Forex. I just haven't read the last 30 pages or so because the one that I got was missing a big chunk. So I don't know how it ends, but I know like the first 80% is pretty good. So it is a change of pace, and it is a much shorter book too. Wow, Joey. Wow. Oh, there's the NQ highs. I don't remember if I pointed that out on Friday's live stream or not. I know when I got to the charts today that this was already marked out. So that's beautiful. This is not. When we do stuff like that, not really. It makes it look like it's going to run for the lows. But, you know, this is the thing, man. Let this be your first lesson of the day, I guess. I think I covered this the other day too. One of the keys, right, it is not just patience, but when it comes to analysis, right? One of the shifts in the state of delivery, it's not just the last down candle or the last down candles, right? Like everybody thinks it is. That's part of it, but that's not the complete picture. Good job, Cameron. Good job. The last imbalance on the way lower, at least on a 5-minute, right? That gets traded through. There is your V-shaped reversal. So what is the formula? What is the 3-step formula for it's one of the formulas I gave in the phases of price. I gave you 2 different ones. Do you remember what they were? The phases of price. Just like with models, with trading models, they are in order. And the phases of price, at least the 2 formulas that I gave you that have 3 steps, they're very simple. They're in order as well. Every time. So, I know the more you learn, the more difficult it is to hold on to the belief that these are free markets, that they are supply and demand, that they are support or resistance, right? The harder it gets, man. Everybody who actually pays attention, everybody who actually is open to learning new things will bend the knee. You will. So nobody remembers. There's 35 of you, less than 35 members, but you guys don't remember? V-shaped reversal. What's after that? Let me refresh just to make sure. Oh, we've got 39, it says. Well, yes, Adam. I mean, that's not what I was looking for, but you're right. Expansion lower met with expansion higher is a reversal. You're not wrong there. But I meant like after that. Like so the V-shaped reversal. Okay. And then what's after that? V-shaped reversal. What's next? Thank you, G. Or Garrett. I can't remember if I started calling you G or just kept saying Garrett. I don't know. Either way, yes, it's V-shaped reversal, retracement, expansion. VRE. Ooh, so complicated, right? So many indicator settings. So many indicators that we have to read, and the indicators have to align. All the indicators have to say the same thing, right? Yeah. Sorry, I'm having a lot of fun today. I don't care. V-shaped reversal, retracement, expansion. So there it is. V-shaped reversal, retracement, expansion. Retracement, expansion. That's the other one. Retracement, expansion. Expansion, retracement, expansion. See that? Easy, chat. Easy. That retracement, right? How far does it go? Well, in this study here, there is your first imbalance in the reversal, which is usually what? Your mentor didn't tell you this. I fucking told you this because it was something that I found through self-discovery. The first imbalance in a reversal usually stays open or usually will not fill. Okay. It will not usually trade to the lower end. Okay. Meaning we can trade to the halfway point. That's fine. We can even trade in the bottom half. That's fine. But what we should not do, and you'll see this sometimes, this isn't 100%. Okay. But almost every time it will leave either the entire bottom half or most or some of the bottom half left open. And then what do you see after that? V-shaped reversal, retracement, expansion. Retracement, expansion. Inversion here as well. Right there. See that? You see how price fucking ping pongs? Right? Trades into that imbalance, lower imbalance, higher imbalance, 50%. Then we trade through. Now we become an inversion. It was bearish very briefly. And then look at all the bodies in here staying in the upper half, right? Look at this supply and demand, baby. Drop an SD in the chat if you love supply and demand, baby. Don't you just love supply and demand, chat? Don't you love supply and demand, baby? It's the greatest thing in the world, isn't it? Good old supply and demand. Sellers came in. Buyers came in. Sellers came in. Oh, no, buyers came in. Right? Right. Doesn't that make you think? Doesn't that get your brain kind of moving a little bit? Doesn't it get the blood flowing? How can it be supply and demand? I don't know. Would the volume otherwise tell us that price would be able to do that? Or does that? Or should do that? Or could you just look at a fucking price chart? Sorry, excuse my language. Could you just look at a chart and go, well, yeah, it's reasonable to expect. It's reasonable to expect. It's reasonable to expect. Wow. And yeah, gee, you would be surprised how much you can learn in like 5 to 8 years of doing this. And not to toot my own horn here again. I know I haven't been doing that a lot lately, so I'm kind of proud of myself a little bit. Pun not intended, or irony not intended, but again, that's like one of the biggest reasons why I can teach you things that most cannot, because I do have things that I've shown you that I learned through self-discovery. It means it was the charts and putting things together and putting reflecting my experience to put things together. That's why other people cannot do some of those things, like some of the things that I've taught you. You did not hear anywhere else. If you did, you would tell us who it was, but you can't because you didn't learn it anywhere else. Not that that's what it's about. I'm not going to come up here and toot my own horn for an hour. It's just like you will eventually do the same thing. Like you will eventually come across the same stuff that I've been showing you. You'll come across the idea like, oh yeah, the last imbalance is a shift in state delivery. Whenever we have two imbalances, you trade the first one, stop at the second one, right? That should have been a law. I don't know if I made it a 48 law, but if I didn't, then it definitely should be, right? So look at that idea here. You have two imbalances, right? Look at all the bodies in here. What supply and demand school? What supply and demand fucking webinar? What supply and demand guru ever pointed that out? Ever pointed that out? When you have two inefficiencies, you can take the first one, stop at the second one. Name a fucking guru that told you, oh yeah, the body should stay in the upper half of an inefficiency. Who the fuck told you that? None. Zero. Not a soul. Right. So, sorry. You know what? I don't know why I dunk so much on supply and demand, dude, but it's just it is what it is, man. Like it's baffling to me that people could see such an immaculate level of precision and then go, nah, that's bullshit. You know? It's just crazy to me. But you know, again, you're entitled to your own opinion, man. It's true. It's true. You can think whatever you want. I liked dotted graph paper. The dot graph is goated to me. But maybe you like blank paper. Maybe you like line paper. Maybe you like spiral notebooks instead of regular notebooks. You know what I mean? It's fine. It's your notebook. It's your money. You spend it. You use it how you want to. It's just not for me. So, anyway. What do you mean? Are there more phases? There was just the two formulas that I gave you. V-shaped reversal, retracement, expansion. And the other one was a continuation formula. It's expansion, retracement, expansion. And if you looked at market maker models, you would see it. Again, more stuff that your mentors just never taught you. So that's why I'm here, baby. That's why I'm here. There's a lot of inefficiencies in the education industry. You like that shit? Line and point best? What do you mean point? I don't understand. G said, the best decision I have made for the last years is being a member on that channel. Look at that. Look at that. Oh, yeah, the dotted ones. Okay, cool. I thought you were speaking gibberish for a second. Thought you were speaking that gibberishness for a second. I didn't know what you were saying. Can you explain why the PM session is usually better than the AM session? A little more in depth. I understand that it has more data to play with, but is there more to it? Honestly, all of last week, almost the entirety of last week, the AM session beat the brakes off the PM session. The PM session was doo-doo last week. AM session had all the juice last week. We could even say the same for today. We had a lot of movement today. And if you were not in, like either down here, oh, that's a good point too. I should bring that up. Equities open is here, right? What did I teach you about the best longs? What is it, law 6 or 7? I don't know. I do not know, chat. I do not know. Law 3. Law number 3, the best longs are below the open. You have midnight EST, and then you also have session. London, New York, NYSE, New York Stock Exchange, right? So there's 8:30, bang. Where is that higher imbalance? Where is price respecting? It is dipping below the open. It's allowed to do that. If you ask me, it's probably designed to do that. I don't know. More tinfoil hat stuff for you. I should get rid of this hat and just start wearing tinfoil. But yeah, there's that. So, and here we are, 74.92. But yeah, so usually the first 30 minutes has the most volatility in the day. So for me, that's 8:30 to 9. That also builds equities open liquidity. So 8:30 to 9 is about right here. So there's your lowest low. There's your highest high. And yes, we do have indicators that do that. That's a decent indicator, I'd say. You know, it's no overbought and oversold shenanigans. No spoofed volume over there. Can't really spoof a high and a low, can you? Spoofing, what is that? There's right, so that was taken, and that was the other side. And that's pretty good, pretty cool. I was saying that earlier, like a new high of day. I didn't realize that was equity's open high, but there it is. Right at 850 too. Weird stuff here. Price making a high at 850 or during that 850 window. I don't know. Probably random. Probably random, chat. Gavin asked an interesting question. Oop, now we're at 94, 95. Ooh, new 30-minute candle here too. Gavin asked a good question. Excuse me. You're never really freebasing your analysis on setups, meaning that almost 100% of your trades are based off of models you've decided to follow and nothing else. Yeah, pretty much. Now the only time there's 96. Oh, there's your fucking highs. Boom. Look at that shit. Look how easy that is. Look how easy that was. Now down here was not that easy, but beginning of the session, told you I'm bullish, looking for 7,500. There were those highs right there. See how easy that is, chat? Look how easy that is. There are few trades that I'll take that are not based off of a model, but it would be close enough to one that would justify it. But otherwise, majority of the time, yes, it's going to be a structured approach. Meaning, you know, what do we have? Right? If you were looking at today, okay, we got the initial shake and bake, right? The initial longs in the first 20, 30 minutes, right? Oh, yeah, breakout. We souped it as well because it's a high and then a higher high for the reversal. We kind of souped this pre-market low, or pre-market high, excuse me. And I think we have London's low right here. So the buyers came in, right? Yeah. And the buyers got raped on the way lower. They got their face ripped off Indiana Jones style. If you know, you know. If you haven't seen Indiana Jones, don't come back until you've seen it. I think it was Raiders of the Lost Ark, but what do I know? So buyers came in, they get clapped. Anyone who was long during London and during pre-market, or excuse me, equities open, stops at London low and intra-session lows, they all got yoinked. So buyers get punished out, right? Pushed out from holding longs that are down 50 points and getting wrecked. And then, of course, with that sell-off, that's building liquidity up here. So again, you still have the liquidity up there from the 24th. I told you about that. I think I thought we would get that on the 25th. We didn't end up doing that, so we just created an engineered high. Now we have a bunch of highs here. So these are going to be low resistant highs. So we still have that high time frame pool. Now we have an intraday pool built here. So again, now we have a higher time frame pool, multiple, and we have an intraday pool. I got to stop drawing circles because I'm very immature. Just like most of you. But just know that we have multiple pools. We have a small time frame pool and multiple high time frame pools up here. Okay? So what I want to do is start looking for longs. So equities open, we trade below, bang, shift in the day delivery. You could long that next candle. I usually wouldn't do that because we may trade back into this. We end up creating another imbalance instead, a second one, right? So that would indicate that we're probably not going to come back down here. We probably shouldn't do that. Okay. So then dipping below equities open, like these would be good buys in here. those down candles right there as like a propulsion. Not exactly, but it would be treated like a propulsion right there. And so anything in there would be good for longs. Retracement, that'd be good for an add-on. Maybe not an original position, but that'd be good for an add-on. And then another propulsion here, right? All the volume came in, all the buyers came in, right? At random down candles. Yeah, sure. Sure, that's how it fucking works. And that's, right, seeing that, that's what makes it easy to go, okay, yeah, well, what do we have? We have all these things in here. Okay, we should see a continuation. Fine. We get the continuation. So it's understanding that the low's been set. The basically liquidity here and London's low here. All that gets taken, right? So pull here, all swept. Shift in the state delivery, in the state of delivery. I'm trying to talk really fast. That's an algorithmic signature that we have made the low and that we are now changing from bearish to bullish. And now these retracements, you see how shallow these retracements are? Didn't we talk about that? Didn't I make a post about that on Instagram? If we're going to be bullish, we're going to have quick, fast expansion higher. We're going to have slow, shallow retracements lower, and then expansion higher. Do you not see that shit here? Do you not see expansion higher, slow, shallow retracement, followed by further expansion? You guys know all this stuff already. This information has already been put out there. I've already given it to you. That's all I really do here, man. I mean, I do show you new stuff, but half the time I'm here just telling you, I told you so, I told you so, I told you so. Look at this, look at this, look at that. Yeah, good job, Willow. We're not exactly at 7,500 yet. I still think we could get that. I would be shocked if we don't. In all seriousness, I would be shocked if we don't get 7,500. And then there's, I think Cameron said NQ to 30K earlier. There's your 30K. Actually, I think we got that much earlier. Yeah, we got that half an hour ago. Not something I was paying attention to, but again, it's the same process here, right? Let me see. Oh, man. That's London's low. So London's low got yoinked at our open, and then our open low got yoinked. So shift in the state delivery there. Not really an imbalance. I mean, it's a very small one. But nonetheless, we went over this earlier. Back into this one should keep the bottom half open, or at least a portion of it. And then 950, we take off. Why did we start expanding right at 950? What supply and demand school fucking tells you that we start buying at 950? I've never heard of it. I've been in this industry fucking 12 years. I've never fucking heard anybody say that. Buy at 1150, buy at 950, buy at 1050. Nobody's ever told me that. Nobody. Zero. Now, I was told what a macro is. I was told that. But I was never told by people who use indicators to look at these certain times. Right? That's all I'm saying, chat. 849, or excuse me, 949. We get that. 950 is here. Then we take off. See that? 950 starts the macro higher. And then 1010 is here. And then outside of that, price still continues, of course. But it's just the fact that 950 is that, not the first one here, but that second one right there. And that was the beginning, pretty much the beginning of that entire move. Quarters theory is fucking garbage. Don't ever bring that bullshit in my chat. No joke. I'm not even trying to be funny. That fucking dude, that goober, that guy's an idiot. So that's what I think. It's what I know. It's not just what I think. That's what I know. Most of those guys have blocked me on Twitter because I used to correct people a lot. I don't really do it as much anymore, but I used to correct all those people who would get shit wrong. And then they would just block me on Twitter. So never outshine the master, right? Yeah, fuck you. I'm corrected you. So, but yeah, there's that. So anyway, what questions do you guys have? What else do you have? We did a little bit of analysis today. We did a little bit. I forgot. I mentioned book of the month already. The Monk Who Sold His Ferrari. I know we're not there yet, but I think Wednesday is the first. So we'll be moving on from 48 Laws of Power to The Monk Who Sold His Ferrari. I talked briefly about field notes. I'll have to give you guys at least another few days or so to get some experience with them. So that way you'll get to see if they are beneficial for you or not. I think they will be. I made a video about it. I made a Substack post about it. I even posted the video on Substack. I made 2 Instagram posts so far about it. So I have really, really pushed the Field Notes brand and the idea of using pocket notebooks a lot. Gee, I'm not really sure I understand your question. Since the indicators are away from my chart, feeling more confident, not overconfident. Do they create anxiety for a reason to people? I'm not really sure. I'm not sure. You know, I think like human psychology, right? I think what a lot of us do, and again, just speaking from the idea that we're all human, right? So this first principle, this sort of like basic principle that at the end of the day, we're all human beings, right? I think human beings, us collectively, we have this natural tendency to avoid responsibility, right? Avoid accountability. Women, right? Avoiding accountability. So changes happen, okay? When you actually reverse that. So you have to take accountability. So you have to start blaming yourself and stop blaming everybody else. You know what I'm saying? And so with that, I think people who rely so much on indicators, they sort of shift that responsibility. So like if they were to take a losing trade, right? Like, oh, I did something. Me, I would say, oh, I did something wrong. I interpreted something wrong. I mistimed it. I got the bias wrong. Something I did wrong. I think people who use indicators a lot, like this over reliance on it, I think when they take a loss, they are more likely to then blame the indicator or to blame that strategy than to blame themselves. I think we talked about that. It's one of the it's not a mental model. It's a bias or a flawed thinking. It's kind of like, well, if I take a trade and I win, it's because of skill. But if I take a loss, it's because of the market or the strategy. And that's not right, you know? So I think people are easy to go, oh, well, the volume did this, or well, the Bollinger Bands did that, or, you know, something to that effect. And they're shifting responsibility. And that I think is where maybe some of that anxiety comes from. I don't know. It's, you know, again, when you guys ask me questions and they're broad like that, you got to realize everybody's different. You know, everybody has different time frames, different entry techniques or exit techniques, trade management techniques. Everybody has different mindsets, different trading accounts, like account sizes, you know, stuff like that. It's really hard to blanket everybody because that's not always the case. But I think generally speaking, that's probably what it is. And yes, Adam, because again, like I said earlier, it was, I think it was Friday's live stream. I talked about how we had a divergence down here and there was like short-term longs that were wonderful. Yeah, because we talked about this consolidation here, right? Liquidity on both sides. And when one side gets taken, it's going to seek the other side. So whenever price is between multiple pools like that, and in that case, that was in here. So let me explain. This was the target. I even made a Stoic Society post about that last week. It was actually like up in here. You know, I didn't time that very well, but I said I'm like bullish for these highs, even though we have the lows in here. So if you were to wait for the lows, reversals were okay. And then again, like I said already, with everything else, when you have these up here, then you have these down here. That Friday low equities open right here was a short-term divergence. So there's accumulation there. Now, Friday was a dookie kind of day, in my opinion. But nonetheless, we leave these lows behind when we trade back into the range here, and we still have these highs. So I have always been, excuse me, an advocate for saying, hey, look, if we're near 50%, this is where price will generally consolidate, or it'll do stuff like this. It'll sweep lows to go higher, or it'll sweep highs to go lower. So when price is here, like at 7 o'clock on Sunday night, I'm not going to be trading at that time. Or 9 o'clock on Sunday night, I'm not going to be trading at that time. But then here at Equities Open, now we have the time aspect, right? You remember up here? Remember the formula up here? Time, price, context. So the time, now the timing is taken into account. Not here, but here. Okay? So you could long that, but again, the issue is, at least for me, when we are here, it's hard to cut it off on a small time frame like this, but when we're like that, I don't necessarily know if we're going to continue lower for these lows or if we're just going to sweep that low and go higher. I don't know. And literally every trade, you don't know the outcome of that trade. That's the risk that we take, right? The unknown variable. It's always unknown. But in order to not be perfect, okay, we're not going for perfection here, even though I have shown you that, but that's not the point. The point is, what I want to wait for is probabilities. When the probabilities, or what I think the probabilities are, when we're at 50% of two high time frame pools, that's 50-50, no pun intended. But like that to me could go higher, could go lower. You could take that if you want to risk it. It's your trade. What the fuck, ad block? Not paying for your shit. Sorry. What I'm waiting for is probabilities. So when we get a shift in the state delivery, now I know the probabilities have shifted from, well, price did get bodied lower. And this isn't even on like a 1 minute. There's probably something more juicy down here, but I'm just keeping it to a 5 minute today. Right? Then we get that. It's like, okay, well, once we get that candle there, all right, you know, what else do we have? Potential mitigation here. I mean, it looks garbage, but I don't know. Every concept could become an inversion. I don't know. It's not something I've ever said before. It's possible, but who knows? When we get into that, could be. Could be. I don't know. But again, once we get that candle at 9:35 to close and this candle opens at 9:40, we now have two inefficiencies. And that tells me pretty much what we need to know. Okay. Now we have two. Now everything I already explained earlier, now we should see higher probabilities that we're going higher. A higher likelihood that we are going higher. Does that make sense? So to me, it's like, if I were watching this, if I were up at Equities Open and watching this, my thought process would have been, okay, down candles being supported, we may trade for these highs. It may do that. I may not trade that. I'm gonna just have to wait. Then I would see, some down candles printing, and I'd go, okay, well, what's going on? What are we going to attack now? London's low. If we get beyond that, Sunday's low. If the carnage really, comes in, if we're really, really fixing a bloodbath today on Monday, then we may trade down here. Right? And there's that idea again that Equities Open on Monday is tricky because everybody couldn't trade over the weekend. They want to come in on Monday, right? Yeah, go in there. Go ahead and put a buy stop above a previous high. Yeah, you do that. Okay. So then it's like, okay, well, how far are we going to go? Are we going to take these out or not? And I would just have to sit here and just wait. Now, on a 5-minute time frame or even a 15-minute time frame, you've got time. You know what I'm saying? Okay, you want to go to the bathroom or go up to Whataburger for some taquitos and salsa. Hey, you got time. All right. You don't have to watch every single candle print. But then you come back and it's like, okay, what are we doing here? On a 1 minute, I'll let you decide. Go look at it. See if there's anything in there. Then it's like, okay, yeah, we got our shift in state delivery. Bang, bang, bang. Probabilities unknown. Okay, now we're at an area where price is likely to go higher. So again, that's why stuff like this down here, it has better RR. I would never deny that. It has better RR, okay? Continuations like these or this have better probability, okay? There's 74.97. Not quite 7,500 yet, but close. Probabilities down here, on a 1 minute, you may find something. On a 5-minute, I'm not so sure. Yes, better RR, not the highest probability. Trades in here. Less RR, obviously. Less RR, but higher probability. So that's something, again, that you have to decide on your own. Do you want to be a high RR trader? Oh, yeah, well, that sounds great. Okay, well, it sounds good until you have a fucking 20% win rate. And now you're shitting bricks because you lose 80% of your trades. See what that does to your psychology. See if that doesn't chop your fucking brain like sushi. I'm always losing, John. I'm always losing. But when I win big. Okay, well, then go to Vegas then. You'll have much more fun at Vegas than you would on this. Go look at the bright lights and the slot machines and the old folks and the free drinks from the chicks with I'm going to stop myself before I finish that sentence. But you see what I'm saying, right? Like, yeah, high RR, usually lower win rate. But you can eliminate a lot of stupid losses from just waiting for the setups that are continuation. There's 74.98, 98.5. What's the high on this? 74.98 and 3/4. Not quite there yet, but we're chugging along. So anyway, I forgot what point I was trying to make there, but you can be a reversal trader or you can be a continuation trader. Or if again you're all of you are banned from doing this for like another 8 or 9 months, but you can do all of it. You can do the home runs, you can add on the continuations and absolutely body price like nobody's business. You could do that. But here's my honest opinion, okay? I'm always honest with you guys. I think the traders who like, I think the people that get into trading, right, and they see these people who post like high RR trades. I'm not saying it's impossible. There are plenty of people who do it, right? You know, stuff like this. That's great. There's nothing wrong with that. The issue is that that of like the mentors and stuff, the coaches or whatever that do this consistently, they're not going to show you the losses that they take. They're not going to show you the 3 times they got chopped trying to catch that low. So yeah, they might have got a 1 to 5 or a 1 to 6, but they lost like 3 RR or 4 RR to get that. And so they learn how to filter out those chops and then only take the big pieces, right? I think a lot of beginner traders that try to do this, they end up getting pooped on. Like, just straight up, like, dookied on. I think many beginner traders would be much better off taking continuation trades, even despite drawdown. Okay. Like something like this 1 to 1.7. Is that something super sexy? 1 to 1.7? That ain't sexy. But you got to remember, this is the earliest entry with the widest stop and the earliest TP. That's not aiming for 7,500 or aiming a little bit higher to boost that R. That's not doing any of that. That's just simply to that high, maybe 1 tick above it, and that's it. And that's still a 1 to 1.7. I think a lot of traders should do this because I feel like a lot of traders may not want the consistent 1 to 5s. They just want consistent wins. Am I wrong? Drop a 2 if I'm right. Like what would you rather have? The occasional 1 to 5, the occasional 1 to 8, or the consistent 1 to 2, 1 to 1.5? I mean, just do the math. Just do the math. Think about this. If you made 2% a month, I know that's not a lot. But if you did 2% per month, right? Which is one trade at 1 to 2 in 4 weeks and nothing else. Right? I'm asking chat because I am not doing that math for you. Watch this. Watch this. 2% per month compounded is an annual return of 26.8%. That sounds correct. If you're a math whiz, please double check the math. ChatGPT ain't always fucking right. But I'm pretty sure 2% per month compounded for a year is 26%. You think the banks are offering 26%? Yeah, they're offering 26%. 26% on your dumbass credit card. They'll take 26%. They definitely will not give 26%. Think about that. 26% would beat the brakes off of most years on Nasdaq, most years of S&P. Most, not every year, but most years, right? 26% is amazing. And that's only 2% a month, not a week, a month. And that sort of math opens up doors that you fucking never thought was possible. And again, that's not home runs. That's base hits. That's stuff like this. It's not sexy. It's not Lamborghini. It's not Corvette. Okay? It's none of that. But it is consistent base hits. Singles, maybe a double here and there. Very rarely the home run. I think, again, I want to close this this segment, and I want to close this stream by saying this. I think a lot of traders would do a lot better if they simply focused on continuations versus the reversals. That's what I think. Now, sure, you're going to have the exceptions. You're going to have people that can consistently hit the higher RR trades. Sure. And there's nothing wrong with that. But that is a much smaller group of people doing this than the traders who can simply do this, who aren't having a dick measuring contest when it comes to trades. Okay. They want to take good trades, get in, get out, be done. Because time will do the heavy lifting. Like you said, that's a long name, brother. I'm going to just say D. Consistency, right? That's where the power is. The power is not in 2%. The power is in the 12 months. So, man, we should have clipped that. We should have clipped that. Adam, I always draw. I know I saw your question earlier and I kind of just breezed right past it. I draw my fibs from targets, like upside targets, to a low that's been set. Ideally, a manipulation low would be better. But because there's no manipulation low and this is the low, this technically, right, it's technical analysis. This technically is the current recent range. So when we're working within a range, this is the premium, this is the discount. And then this is the discount end of the premium. Notice where that long is. The discount end of a premium. Right. Still a discount though. Okay. And yeah. So that's where I draw them from. Like if this low here would have been taken like that, like if we had a wick here like that, then yeah, I would 100% draw it to that low. And now we're working with this range. So then this becomes fair value. This becomes extreme discount. And then everything else becomes a continuation pretty much. So, I mean, that's really it, dude. It's waiting and waiting and waiting and waiting, and then striking when the probabilities are high, or something like down here, if you'd like. Fine. We'll look at a 1 minute just because I didn't do it today. We'll look, we'll take a gander. We'll see what's down here. Arguably not a lot, but there is a immediate rebalancer here. You could extend that over. That's an immediate rebalance. This imbalance is kind of trash to me. If it was me working within this, I would have just used this. I did not. But if it was me, I would have just did that. Because I would have said, okay, that imbalance saw something here. Then we traded through it here. And like at 923, that could just be a long. And then a stop at this low. And then I would have taken drawdown. And then immediately, that'd have been it. So, I mean, that's okay. Let me see that 2-minute chart. Oh, that 2-minute chart. That's much better. That is much better. Imbalance, a little bit of a reaction, trade outside of it, boom, perfect inversion. Look at those bodies respecting it. It does trade to the low end, but the bodies are staying inside of that. That's arguably that 2-minute is cleaner than the 1 minute, personal opinion. But yeah, that's it. So, oh, thank you, Cameron. Y'all need to be more like Cameron. I need some assists. Look at that 420 level 2. See, can't escape it. Cannot escape it, chat. And thank you, G. I appreciate it. Thank you, Adam, as well. I try to come on here and like not bullshit, okay? Like you ask me questions and I'm trying to give you the best answers that I can. And it's free too, by the way. Don't forget that. Okay? YouTube just notified us, creators. We can change our prices now. I'm allowed to change the price of the membership once a year. I can do that. I could immediately jam the price up. End the free live streams. I could do that at any time. So don't forget that, chat. Don't forget, this stuff is free. Mark, I am not sure, bro. I use 310 as the close. Like, it's weird. 3 o'clock is the close of the exchange, but like the public regular trading hours. So I try to be out by 3. And if you have a funded account, it's 310. But I would just try to be out by 3 anyway. So hopefully that helps. All right. Now this time, for real, y'all be good. Be blessed. We'll be here same time, same place tomorrow on Tuesday. I need to get some of my drawings back. I deleted everything. Okay, there we go. Yep. I will see you guys tomorrow on the 30th, the last day of the month. So be good. Make good decisions. Don't be an idiot. I'll see you tomorrow.